Ladies and gentlemen, 2022 food for thoughts. So I put together this information. Hopefully it will give us some ideas so that you don't have to do a lot of research on it. Now, nobody can have a crystal ball what going to be happen in the future. But we study histories and we're doing some research and analyze the current market environment and geopolitical and policies in the countries and around the world, and what's happening is in the past couple of years and what's happening now and what we expect to be happening the next 12 months. So I just put together some food for thoughts here, and it was hopefully that it helped us to prepare for 2022 coming into this year more prepared and know what to trade and what not to trade, and what we should do if the market is going against, if the bull is lacking and the bear is starting to take over, or what can happen. We hope for the best, but prepare for the worst. So before we get started here, to make sure everybody understand that the information presented in this webinar and anything that we're talking about trading chat rooms is for information and educational purpose only. It's not an advice or any recommendation to buy stock or sell stocks and any securities. So make sure that we do our own DD and consult our financial experts before making any trades or investment. So everybody understand that. So make sure that we do our due diligence before we make any investment. All right. All right. So next, let's take a look at what we have in store here for 2022. By the way, before we start, if anybody have any questions, anything, feel free to interrupt me. We go over this. It takes some a little bit of time, but within half an hour we should get this one done. But there are a lot of information. Now we have new people in here, and also we have members. So we'll have some other information for our members after the webinar. But this is just overall of what I put it together. So hope to help everybody get some something written down. Somebody want to take note of it. All right. So what we have in 2022. The one on the left side here are some of the possible things that can impact the market, that can invigorate the bear to move in to replace the bull. So we have to pay attention to this. So the first is the Fed policies, that include interest rates hikes and tapering. As you can see, yesterday they had minutes, and it's just a minutes, right? So it's not, they haven't really do it yet, but it's just the plan. But it's already spooked the market. We saw the sell-off yesterday. So the Fed policy, I think that the main key, the key important things here that can really impact the market. But we have been working with Mr. Jay Powell for the last few years. I think the market is really have a relationship and know what he's going to do. However, right now they're talking about slowing down buying bonds and possible interest rates hike faster than they projected to reduce inflation. So the inflation is the as you can see, this he's talking about the transitory. The word transitory is fancy word for temporary. It's no longer temporary. It's in the store now, so they accept that it's here, and we have to deal with it. So no matter how worse it can get, so they have to get into tech actions to control it, or to try to not let it go too high. I don't know if you what happened to your household, but in the past year or so, I see my groceries bills have been double, and even a little bit more than double. So they talk about 6% of the inflation right now. So if you put the money in your bank account, every year you're guaranteed to lose 6%, right? So and so that's an inflation, and because of inflation now, you know, the Fed's starting to take the action to control it, and that spook the market and then can affect some of the high growth stocks, right? And the third one is the COVID variants. COVID probably gonna here and stay. I don't know how long it's gonna be going on. None of us probably know about this. But the variants can impact the market as well. So right now we have the Omicron. I don't know what's going to be next, but hopefully we can get to the point where these big shot make enough money already, the pharmaceutical industry, so they can slow down and give us some breather, right? The fourth one is supply constraints. So this is the China schemes that I've been talking about this. For those of you who knew or don't know what the China scheme is, you know, the CCP has been going around the world and tried to snap all these important, pertinent industry that, you know, the source of supplies around the world, especially Asia, Africa, and South America. And somebody was talking about the other day, they're from Sri Lanka. Already that happened. That happened around the world, and they can want to control the supplies, and they can that they can control the industry. And that, well, I will go over that a little bit more on the next slide. But the shortage of workers, not sure what's going on, but as you can see, with the pandemic, I think, you know, a lot of people have learned to live for less. And you know, the issue with kids, child cares, you know, maybe one spouse working now, and also the people who are close to retirement age, you know, they might just take some early retirement. So that took out some of the people out of the market, and also the pandemic still going on. You know, people have underlying conditions, which is a lot in America. You know, we have diabetes, obesity, we have heart disease, you know, all kind of things because of the food that we eat. That's another story, but you know, we've been eating the American diet. It's called the SAD, right? SAD, Standard American Diet. It's pretty sad, but we've been doing it for years, right? The food industries and the pharmaceutical industries keep banking on, you know, people eat, get sick, go to the see doctor, subscribe medicine. So it becomes, I think that's the silent pandemic that they don't talk about. But anyhow, so that I think that's impact the shortage of workers, and so we will talk more about that. And then we have the midterm election coming up. Okay, we have the midterm election coming up. Usually in the midterm election here, right now, it's in the favor for a market because you know, it's a stalemate. The Wall Street like to have stalemate. No decision is made. It's good for them. So we got the split 50-50 in the Senate. And then we got Mr. Joe mentioned is a Wall Street gold star. So he can stop the policy that doesn't good for that's not good for Wall Street. So I think that guy is you know, Wall Street is lift him up to like a god now. Treasure that guy. But we have the midterm election coming up in November. So if the Democrat taking over the, you know, have majority in the Senate, or the and the House continue to control the House, or the Republican is going to be taken over. So we don't know, but that can create some wild card gas there, so it can make the market fluctuate. So that can impact the market. And then, I don't put the number 6 there because it's from the number 1 to 5 is the fact, right? Is the fact is happening right now, and is an ongoing issue. Recession, people are talking about recession. It's a thing, maybe, but we keep an eye on it. A recession is a period of economic contraction that you probably know it, where the business and have less in demand and begin to lose money, so they cut costs and slow so to control the losses. Company begin to lay off workers and generate higher levels of unemployment. So that could happen, right? That could happen. So it's a question mark right now. We might not see in 2022. We may see in 2023. Who knows? Or maybe we'll never see it. But it's a question that could be a risk factor. So those are some of the risk factors that we see in 2022 that can impact the market, especially the first half of the year. So we'll see how it pan out until May and June. But from now to May to June, these factors are really it could be an impact for the market, and we might see some very volatile market in the next few months, right? On the bright side of it, right? On the price side, on the bright side, I would say the positive, the optimistic side of it. First one we have here is somebody know that the baby boomer used to be a generation where it's like booming in the create the economic drive in the 60 and the 70 and 60, because the baby boomer was the age of the working age and the innovator age. Now we have the millennial generations and the Y generation is sitting at about 40% of the population. All right, so 40% of the population is the working age and innovative age, where the production is coming out from these groups. Is 40% of the population in the U.S. And the unique thing about that is U.S. is the only country that have this group of population that the majority is in this demographic right now. So we're looking for possible growth into the next 10 years. So looking a longer term. That this population will support that growth and demand for the next 10 years. The number one here, the U.S. company is sitting on $7 trillion in cash. So after the pandemic, during the pandemic, a lot of companies freeze money and increase their wealth with the demand, the fast forward economy. So they're sitting on a lot of cash right now, $7 trillion, folks. So we might see that they can use those cash to deploy into some of the sectors, some of the investment. So that could be the bright side that can carry the economy and avoid the recession. Pumping into the market to increase the demand for investment and innovation. So that's the unique situation that the U.S. has right now. $7 trillion sitting in these corporations that they can use it. Pent-up demand, the situation with demand for service and products is usually strong. We might see it continue right now with the after pandemics. People need to get back to work, need to eager to go back to traveling. But still, with this variant still playing a role in it, but we can see the demand probably continue to go with the population. Is in the demands demographics age here, where people are spending age, right? So so we may see this continue to grow as we can see in the last 12 months. And employment. Employment is a good and bad headed, the two edges short here. We want people to get back to work. I think the money they're saving in their saving account and with the hopefully, right, with the pandemic it winding down, people are getting back to work. So employment situation might improve. But if the employment situation improve, then the interest rate hikes might be, time for them to raise the interest quicker. So it could be a two-edged sword here on employment, good for people, but not good for Wall Street. And then the Fed policy could be a good thing because Mr. Jay Powell and his team can navigate it and have favorable policy for the economies and the stock in general. So it could be decided, could be red thing, could be a green thing. Okay, so but those are some of the factors that we see in 2022. Especially these first three here is the unique situation that the U.S. have. So that may carry us through it and avoid a recession. We'll see. But we got some good positive things in place. Despite all these red alert here for us, that situation is going on right now on these inflation, COVID, and supply constraint, midterm elections, and all that. All right, so that's what I expect for 2022. All right, so what about the bull market and what's going on? How can we recognize if it is just a pullback, opportunity for deep buying, or is it going to be a crash? Okay, the bull market is just the same as human who created it. It's not immortal. Okay, we can hope that it will continue to go, but we have to prepare for anything that could happen, because anything going up could go down anytime. But these are the 4-1 inside that occur together. Okay, that could create a market crash. High market multiples, average about 15 multiple. Right now the S&P 500 is about 30, so double. It has been rising, and in the last few years, nonstop. So we are double multiple right now. So we got that. There's a link here. You can go on and check on this one. All right. If you go on that link, you can see where the S&P 500 is at, where the multiple is at. It double the average right now. So it's pretty high and cut a little in the edge, high alert there. And then the second one is the Fed actions. Okay, Fed raises rates, make bonds less attractive. This crimp corporate earnings. So as this is going to be happening here, so they already announced it. They usually when the Fed raised interest rates, they don't want the surprise, but they can surprise the market to decrease the rate, but they don't want to surprise the market when they increase the rate. So they usually announce it, and then did yesterday that they could come out with the new rates at any time, right? And then we have the inverted yield curve. That's when the 2-year Treasury bill interest rate is higher than the 10-year Treasury bill. Right now we kind of in a flat rate. However, if the more people seeking for the safety, so they usually buy the 10-year bill, and if they buy the 10-year bill, the yield can going up, and the price going down, because that's going opposite direction. I mean, the price going up and the yield come down. And if the yield, the 10-year come down, and the 2-year bills interest rate is higher than the 10-year yield, then we have the inverted yield curve. So that could be a situation if people are seeking for safety, they can buy more 10-year T-bill, and that will push up the price and lower the yield. And if lower the yield, then it go below the 2-year bill. That's inverted yield curve. So that could happen, right? And then the 4-1 that usually is the one that make the whole thing happen, called the black swans. Okay, those are unfortunate events. So we have 9/11, subprime mortgage bubble. Although people see it coming in 2008. 9/11 probably nobody see it, but the subprime mortgage, somebody saw it. You can see that in the movie, the Michael Berry, The Big Short. He saw it. He talked about it. Nobody listened to him. He didn't have that. He didn't have a. He had the PhD, I guess, but still people don't listen to him. So whatever that happened there, so you can watch that movie. Right? And then we have the COVID-19 happen in 2020. Okay, so if we have the black swan things happen, let's say China, the CCP gonna attack Taiwan, and everybody gonna jump in, Europe and US gonna jump into, that could be a big event, all right? Or Mr. Kim Jong-un got the command from Mr. Xi, say, hey, let's do some nuke, you know, could things could happen, but who knows, right? But the black swan, the event usually causes right when thing happen. There's no these three doesn't matter anymore. If black swan is coming, boom, it go, right? So and also I put this in here. Now something is in the work right now that could cause a black swan, right? You can call it a black swan or something, but the supply chain bottlenecks and the pandemic-related labor shortage are viewed as temporary. What if they are not? Okay. What if this grabbing the gooseneck theory, the CCP try to squeeze this as much as possible to push the Western countries to until they do some favor for them, for the CCP, and the labor shortage continue and cannot resolve. Now we don't have, we have the supplies constraint, and plus, you know, not enough people to work. So now it's gonna affect the GDP, and if affect the GDP, then it's gonna create it's gonna cause recession. So it's very important here. It's very important that is happening. Okay, but how worse it can get and how far can it go, it can create a recession, you know, kind of a black swan event that can cause the market to really tumble. Okay, so just a question mark there. Hopefully, cross our finger, but that could happen. Okay. All right, so you're probably waiting for this slide, and like I say, we can have to be fair with our members. Who here we're gonna have some other particular stocks in this industry will be posted on our website. Okay, in the meantime, here this is where we are. For the first half, I would focus on the energy sector, the industrial infrastructure, healthcare, and residential REIT, real estate investment trust. So the energies, these are the ETF here. You can take a look at them. XLE, ERX, that's Bob's favorite, by the way, Gersh. Industrial infrastructure, XLI, EXI, and healthcare. I like the CURE, CURE, and XLV. The reason in the first half of this is a lot of in place is still in here. Okay, a lot of things going on here in the first half of the year. So we want to be a little bit more in defensive side. So this is the defensive side in the first half of 2022. So we can make some money investment, anything that would be in the defensive side. The second half, by the July or something, hopefully we can see what's going on. Kind of more projection of who's going to be taking maybe how's the Congress going to pan out in the election. And then by then we should have the fear of interest rate hikes and all that probably already taken place and priced in. And then we want to move more into the technology, and healthcare is still in play. So the technology is going to be looking to be more brighter future, and by the second half of the year. So, but I would say the first half I would play a little bit more defensive into these, and then I would look to deep buy the Mama stock and the Tang stock. Okay, the Mama or the Tang, right? What you call it? The Tang is the term that I came up with. myself. But Mama was talking by Jim Cramer from CNBC, Facebook, Apple, Microsoft, Amazon, the Google Alphabet. It's called Alphabet, Google. And then tanks, my tank is Tesla, AMD, Nvidia, and Netflix. Although most of these companies right now are kind of over the multiples are high, so they might need to go back down. Like I mentioned earlier, the right here. Oops, where's my the multiple is around 15 average, right? But a lot of these are a double or even more. Tesla is a lot more than that. And most of it, except for Facebook. Facebook is around right at there, like 20, 25. But most of them are really in a high multiples right now. So a pullback would be great. Why? Because these companies is actually produce something. They have really lower debt, except for Tesla. Most of these companies are really low debt, have a great balance sheet. They produce the product or services. They make a consistent profit and income revenue. So we are a strong company. If you can buy for the discount price, that would be a great time to buy. So on these pullback on these companies would be a great opportunity for us to jump in. All right. What to avoid in 2022? High multiple stock with the bad balance sheet and the pandemic high flyers. So I don't know. The stock like M&A probably not going to be there this year. Zoom, OSDK overstock, and those guys that been propping up like big time during the pandemic. So the Peloton, those guys. So we have to pay attention to those, and I might just avoid them for now until they get really back to where it should be, and maybe we can look at it to possible deep bottom later. But in 2022, I think people are going to be more focused on the fundamental because now we don't have a support of the Fed to put in more money anymore. So when the Fed put money into the economy, I mean anything can fly. Especially high growth, speculative stock. You can see it in 2020 was crazy, right? So Zooms and those guys are going like firework. So I want to avoid those guys now, right? So what's next? As I promised, I'll give you a free pick. Now this is just a wild pick, considering the what's going on with the COVID, and it might not going to be going away. Probably going to be stayed as an annual kind of vaccine now, like a flu. So in that speculation, there's companies out there that making the research and doing some study now. They've been buying manufacturers and partner with manufacturer and buying some facility to produce a pill vaccine, okay, that you can take in your mouth. You don't have to store at below 30 degrees. So it's gonna FDA approved and everything going well, and they look like their trials have been going well, have over 85% respond. So with that pill, easier for people to take, and also more should be available for the people in the third world country where more people can use it. So you don't have to store in the refrigerator. So with that being said, and I picked this one. We'll see what can happen, but it's a wild pick. Okay, so this is the free one for us. That's VXRT. Okay, that's the company that making that pill, vaccine pill. So there you have it. So you can do more research on it. Don't take my word for it. To do more research on the company. Or they recently they recruit a lady in the board. She's have really high been in the industry for a long time, and had connection with the pharmaceutical industry. So we'll see what's gonna be happen here. But that's the one that I have for a wild pick in 2022. All right. So we'll see how high can it fly or nothing. But a wild pick there for us. So we finished in a little bit over half an hour. Hope that information helped, ladies and gentlemen.